I used to think I was being rational with my investments. You know, looking at valuations, thinking long-term, trying not to chase the hype. Basically, trying to behave like a responsible adult. Huge mistake. Because apparently, being rational, it's an outdated mentality. Forget value, forget growth. Momentum investing and speculation are winning. It's like math, value, and reality stopped meaning anything long ago. And yes, it sounds crazy because it is crazy, but it's also a fact that it's been working now for years. US stocks, for example. If you look at every single indicator, the market is anywhere from 100 to 200% overvalued. The thing is, this is nothing new. 2 years ago, it was also massively overvalued, and yet now it's 40% higher. What about property prices? Excluding a few isolated markets, today they're mostly 70 to 90% overvalued. 2 years ago, they were too, but guess what? Now they're 15% higher, and despite sales slowing down, the prices basically remain unchanged. Thankfully, gold and silver are different. Nah, I'm just kidding, they're also the same. And if you're a rational, cautious investor like Warren Buffett or like myself, or if you simply don't have enough savings to invest, chances are that more and more you're feeling like a loser or like an actual idiot. Trust me, I get it. I've been looking at investment opportunities for the last 2 years, and I cannot tell you how many times I passed on something simply because I thought it was too expensive or it didn't make sense. And then a few days, weeks, months later, I look at the numbers and boom, I could have made like 30, 50, 100, 300% return. What? There's no denying it. No matter the reason, the feeling of missing out on great investment returns sucks, especially when it feels like everyone else is raking in the profits. And when that happens over a sustained period, you're forced to start questioning yourself. Was I wrong all along? Am I being overly cautious? Could it be, perhaps, just perhaps, that I'm a f***ing idiot? And just like that, you turn into a ticking bomb. So in this video, I want to show you the #1 mistake people make after missing out on money. A mistake that destroys more wealth than any bad investment ever could. And then, I'm gonna stop you from ever making that mistake. First, by showing you that the way you're feeling is based on a lie, and understanding what's truly going on and why you feel the way you feel is gonna be massive to defeat this dangerous mindset. And second, by introducing you to a much better alternative, a way to stop feeling like a loser without actually risking becoming one. One tiny thing first though, if you're enjoying this video so far, do me a solid and please consider subscribing to this channel. I don't know you, but I'm constantly seeing stories of people making money. Everywhere. On social media, on YouTube, on podcasts, even in casual conversations. Someone made a killing trading. Someone flipped a house. Someone built a successful business. Everyone seems to be doing something, and somehow they all seem to be winning. And when you see enough of these stories, it starts to feel like it's the natural state of things, like it should be easy. And yet, most people look at their life and they're like, the f***? Why am I not like that? Something must be wrong here. But here's the thing, what we are seeing is very often not real. For starters, the internet is full of people who lie or exaggerate about their finances to create an image or to make a quick buck. But even if all of it were real, it would still not be the full picture, because for every person talking about how they made money, there are hundreds or thousands who tried and failed. But surprisingly, those people don't go around telling everyone about it. Nobody goes on YouTube and says, "Hey guys, today I'm gonna show you how I lost 80% of my savings in just 7 days. And then, if you stay around until the end, I'm gonna teach you how you can do the same." What we see is deeply biased. We see the small minority who made it, who won, while all those struggling, losing, and failing remain mostly invisible. So your brain does what brains do. It builds a story with incomplete information. And that story is simple. Everyone is winning except me. But there's another layer to this, because it's not just what you see, it's also what you remember. And here's where your own experience of reality plays a trick on you. Missing out feels like losing, and that feeling sticks. It sticks way more than any wins and infinitely more than the times your caution saved your money. Those are just taken for granted and dismissed. That's why you don't think about the time you consider buying Bitcoin at 90,000 and luckily you decided to pass. But on the other hand, you can't forgive yourself for not buying Nvidia in 2023 and then in 2024 and then again early 2025. It still hurts, right? You're also lying to yourself. You're comparing lows with historical highs and blame yourself for not buying early, completely ignoring the fact that no one can perfectly time the market, and even if by chance you did, you're vastly overestimating your capacity to hold. I mean, it's true that if you had used $600 to buy Apple shares instead of an iPhone back in 2007, you would now have about $100,000 worth of stock instead of a worthless piece of junk that no one knows why you refuse to throw away. But let's be real, would you still own that stock today? Come on. You probably have sold it in 2008 and you would have made a nice profit, 2 to 3x, but between that and a 7,000 time return, there's a big difference. And yet, your brain ignores that and keeps replaying the ideal case scenario over and over again. So what you end up seeing is a very distorted picture of reality. A reality where success is visible and failure is invisible, and a reality where your own missed opportunities stick out like a sore thumb, while your wins and all the times you made the right call are basically ignored. So of course you feel like an idiot. Based on that reality, you are the only one missing out and falling behind. But here's the thing. You're not falling behind, and judging by the fact that you're watching this video and are seriously considering to subscribe, I can tell you're definitely not an idiot either. The problem is that you're comparing your reality to a highlight reel of wonderful outcomes. I used to do that all the time, and I struggled unnecessarily until I understood that such a comparison is just not fair. And if you don't correct that, you're in trouble. Because that feeling starts building pressure until eventually caution goes out the window and you start forcing decisions. And forced decisions are almost always bad decisions. Because the number one mistake after missing out on money is trying to catch up. And I know how tempting that is. Once you feel behind, everything inside you wants to fix it, and fast. You don't want steady progress anymore. You want a jump. You want that one move that puts you back on track. And that's exactly the mindset that makes people vulnerable. Because once urgency enters the equation, rational thinking starts to fade. You're no longer asking, is this a good decision? You're asking, am I missing out? And those are two very different questions. When you're in that state, and I think many people are in that state right now, you become much more willing to take on risks. You lower your standards, you skip due diligence, and you trust things you would normally not trust. Why? Because the bigger fear is no longer losing money, it's missing the opportunity. And that's exactly what scams and get-rich-quick schemes are built on. They don't sell you a product, they sell you a feeling. The feeling that this is happening now, it's your chance, and if you don't act on it, you're gonna definitely regret it. And if you already feel like you're behind, this message hits hard. That's how people end up making decisions they would never make in a calm state of mind. But I don't want you to think that just by avoiding scams you are out of trouble. No, the markets are no safe place for those chasing redemption either. Because when you're trying to catch up, you're no longer investing, you're chasing. You're buying things not because they're good, but because they've already gone up. And you're taking risks not because they're calculated, but because you're emotional. And here's the thing, sometimes it works. Sometimes you jump in and it keeps going up. And all of a sudden you're making money and you feel like a genius, so you start telling others about your success. But in the same way you weren't an idiot earlier, you're not a genius now. In upwards markets, everyone feels smart. Everyone thinks that they figure it out and they grow overconfident. History has shown this over and over again. It happened in Holland in the 17th century with the tulip bubble. It happened in the dot-com bubble. It happened in the housing bubble. And it's happening now in the AI bubble. Because even though every time people think, no, this time is different, it isn't. And when the music stops, and mark my words, sooner or later the music always stops, the people who were chasing, they will be the ones left holding the bag. That's the sad reality. The ones who felt like losers for missing out are usually the ones who end up becoming real losers when they let their emotions guide their decisions. So what do you do? Inflation is merciless, and sitting on the sidelines forever doesn't feel great either. Because watching everything go up while your money slowly loses value, it's frustrating. So I don't think the answer is to do nothing. I think the answer is to do something better. And this is the approach I've been trying to follow until sanity returns to the market. Now, let's be clear, this is not professional financial advice. This is just what I think makes sense in this context. It's a two-part strategy. First, I focus on making money in a way that actually makes sense. Through effort, through skills, through building something, or investing in safe passive income sources. Something where the outcome is not based on timing, but on what you do repeatedly over time. Because at the end of the day, the most reliable way to make money is to create value, not to chase it. And I know that's not exciting and you're not gonna get rich overnight, but it works, and most importantly, it gives you control. Now, the second part is where you allow yourself to play the game. But to do this, you need a certain level of privilege. You need to have money you really don't need. Not today, not tomorrow. I'm talking about the type of money that you could burn and your life could not change a bit. And you need to be able to think just like that, because it's essential for this strategy that you treat that money like it's gone the moment you invest it. So here's what you do. You take some of that money, let's say 10% of your total available funds, and you treat it like monopoly money. Because that's what it is. It's something that lets you play and participate in the market, but within a controlled sandbox that lets you make decisions on your own terms. And only with that money, you allow yourself to take risks. Not crazy Ponzi schemes, but not treasury bonds either. Things that could go up a lot or lose 30% in a week. But here's the key difference. You don't do it to catch up. You do it to participate, to learn, to explore. And because that money is already gone in your mind, you don't panic, you don't chase, and you don't make emotional decisions. And ironically, that's when people usually make their best decisions. So here's the idea I want to leave you with. Feeling like you've missed out doesn't make you a loser, and it doesn't make you an idiot either. It makes you human. What matters is what you do next, because that feeling can push you in two directions. It can push you into chasing and risking it all trying to catch up, and that path almost always ends up badly, or it can push you to step back, to understand what's really going on, and to use this time to build something real, taking risks but in a controlled, intentional way. I made my choice. Now the choice is yours. Thanks for watching, and I'll see you in the next video.